From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Thursday afternoon, the 5th of December. Hard to believe we're nearing the end of the week, and what a week it has been so far. Today, really positive. We've waned now as we make our way toward the 4 p.m. mark, but we saw the steady march upwards through the morning when we saw Asian markets coming online. We had some pretty positive commentary coming from Jerome Powell in terms of the U.S. economy. Still, though, committing, it seems, to the path for interest rate cuts coming this month, I should say, in December. And that gave the markets something to rally about. Interesting to note as well, I don't know if you're living under a rock or not, but we finally saw Bitcoin surpass that 100,000 mark. So 6 digits for Bitcoin. And that comes after Trump's appointment to the SEC, a crypto-friendly gentleman. Atkins is his surname. The market momentum really did sort of wane in the afternoon here locally, but we had records being set in the U.S. once again, the 56th record high for the S&P 500 overnight, the Dow, the NASDAQ. The market really took the commentary coming from Jerome Powell in his stride. I had a chance to catch up with David Scott, earlier on today. He said, look, nothing much has changed in the rhetoric coming from the U.S. Fed. But, the economy, by all accounts, is going pretty well. And we're leading into that non-farm payroll report on Monday. Really interesting to note that we're not expecting, I had a chat with Phil O'Donohoe from Deutsche Bank earlier on. He's not anticipating that we'll see any sort of cuts coming through from the Fed in 2025. Think about that. So the economy is going well, no need to reduce rates there. We'll see what that means for the conversation. And of course, I had a chat with Scotty about what the GDP read meant for rates here in Australia. The market has slightly pulled forward its expectations for a cut, but everybody that I spoke with, and again, those interviews all up online, ausbiz.com.au, saying, look, May at the earliest for cuts coming through here. So what has that meant for some of these different sectors here locally today? Well, it has put pressure on the REITs for the second day in a row. When we look at the sectors for the ASX, 7 out of the 10 sectors were higher. We did see tech really lifting. We saw tech in the United States looking very nice, thank you very much. Part and parcel inspired by Salesforce, but also just the general enthusiasm. The momentum is continuing for global markets. A slow grind higher for the ASX. Technology one, though, looking good, up by close to 3%. OPEC Plus is meeting, likely to, lots of questions as to whether they will restrict supply once again to help support the price of oil. Bit of a mixed picture here, but the sector overall down by 0.9%. When it comes to corporate stories today, Rio Tinto coming under just a bit of pressure. So it lifted its CapEx guidance for 2025, forecast higher copper production as well. Also some calls for the CEO to, unify, get rid of this dual company structure in the UK and Australia, but apparently the CEO is not going for it. Fonterra, it was one of the companies picked by you that we discussed on the call today. Good day for it, because we did see its net profit coming in at $236 million for the first quarter, focusing on its strategic, high-performing food services business, and the guidance left unchanged. Bit of a change at the top for Wesfarmers. Ian Bailey will retire as Kmart Group MD in April to be replaced by the current Chief Financial Officer. And he will head up that really, really popular Anko division. Yeah, that one garners a lot of interest, particularly around kids' birthday parties, at least at my house. And so he'll be heading up that. Now, HMC Capital, it has acquired a portfolio of renewable generation assets and storage assets, I should say, in Victoria for $950 million. That was the stock of the day. We'll get there a little bit later. so that you can hear what our expert guests had to say about that one. E-minis under a little bit of pressure right now, and we've got the S&P ASX 200 still mildly positive, up by about 0.1% as we head toward, well, what will happen in Europe? We've got big geopolitical problems there. Also, what will happen in the US tonight? And to help get us set for that, welcome to the COB, Kyle Rada from capital.com. Kyle, nice to see you. Look, what happened this afternoon with some of that momentum really fading as we made our way toward 4 o'clock?
Yeah, really didn't appear to have much traction from about midday onwards. And like you said, we sort of a bit of a dip going through into the end of the day's trade. I mean, we did make another test at 8,500 level, and there really wasn't that much impetus to sort of push it much higher. The energy and material sector were fairly significant weights today, as you sort of noted. We have seen a bit of oil price volatility, downside moves in the price of crude really going into this OPEC meeting, which, we'll obviously get a little bit more of a sense on the future outlook for supply in 2025. But I mean, overall, we sort of ran into those typical compositional issues, I think, for the ASX 200, where, we had all the hallmarks of Wall Street's strong lead in terms of, being very much tech dominated, and we saw some strength through tech today, but just not quite enough to push us to record levels today, or at least for the time being. And you get the sense as well, at least for global markets, that we'll sort of tread a little carefully going into that sort of non-farm payrolls figure on Friday night, because it will more or less tell us what the Fed's likely to do in a couple of weeks' time.
Yeah, speaking of the Fed, we heard from Jerome Powell through the overnight period, talking about the Fed being able to move cautiously on rates, but we still had, markets hitting record highs. So what gives?
So I think there is, in the short term, a real focus on the December decision, which after the weak ISM services data that we got last night, as well as those comments from Powell, shifted the dial a little bit closer towards pricing in a rate cut in a couple of weeks. So at the moment, the odds sit around 75%. They've been swinging between, say, 72 and 78 for that December Fed funds future contract as of today. But I think where the ambiguity is, and I think this is almost a sort of strategic ambiguity, if you want to sort of borrow military terms from the Fed, is that it wants to maximize optionality in 2025 because there's all this uncertainty about whether there is a level of stickiness once again in inflation. We have seen sort of a stubbornness in recent inflation data. And rolling into that, there is the potential that we'll see another lift in sort of the hiring in the United States in November. And of course, we know that growth is sort of running in the high 2%, which is very much conducive to an economy that will continue to add jobs and, will remain reasonably robust. You overlay that with the fact that we will have, probably fairly accommodative fiscal settings next year once the Trump administration takes the reins. And there's all this kind of doubt as to whether the Fed will either need to cut rates any further next year, or will have even the ability to, on the basis that maybe we'll see growth start to pick up and inflation pick up a little bit as well. So again, I think what happened last night was a little bit of short-termism from the markets, pricing in that greater chance of a Fed cut in a couple of weeks' time, and that boosted stocks. But there is that kind of, again, ambiguity going into next year. The Fed is trying to strategically manufacture that so that they do have that optionality.
Yeah. Okay. Kyle, thoughts about Bitcoin hitting 100,000? I had guests today saying 110 is no problem, maybe even higher than that. So where to from here?
I think 120 is the one that at least I've heard in a lot of the commentary, and I suppose just the general sort of chit chat and scuttlebutt in the markets is maybe the next big technical level to watch. It looks almost inevitable in many respects that would break this milestone at some point in time. I sort of thought that it might have come at the end of this week, but maybe more going into the non-farm payrolls. It's actually quite an interesting setup because I was looking at the setup going into the end of 2020, and cast your minds back. This is when we were just sort of testing that 20,000 level for the first time in the markets, where we're struggling to break it. It wasn't until right at the end of the year going into that Fed decision that we did break that big milestone then. And then we saw the crypto continue to rip. If you want to go back to some further historical precedents, 2016, 2017 to 2020 as well, you saw rallies between the middle of November and the end of the year of 60%, 180%, 160%, which is all to say that, we're setting up really well based on, historical price action for potentially for some further rallies. And then, if you look at the fundamentals, lower regulatory risk, this potential fiscal profligacy, some people would argue that would certainly add to the argument for owning Bitcoin. Plus, maybe further interest rate cuts and this geopolitical risk. There's just so many tailwinds there at the moment. Obviously, volatile asset, but we saw a little bit of cheering, just maybe a little bit tongue in cheek in the office today. Certainly, some people on the right side of this trade. But if nothing else, I think it's certainly a signal of the asset's legitimization. And again, history suggests that this rally could continue even further.
Well, we will be watching with much interest to see what happens overnight. All right, Kyle, as far as what else is happening overnight, we do have a retail sales read in Europe. Europe is really starting to feel like a bit of a basket case. And we do have, what else? We've got the trade deficit. We have initial jobless claims in the United States, and also a couple of Fed speakers daily embark in. But I think you alluded to it earlier. I mean, the next big one would be the US jobs report tomorrow.
Yeah, definitely. And there might be a little bit of caution going into that, just because, again, it's going to probably be the difference between, whether we have a Santa rally and not, and it so often is. The jobless claim figures will also be interesting because, again, it all sort of feeds into this narrative about, the labour market strength and how strong the US economy happens to be, and to what extent, like I said before, there is going to be a requirement for further policy easing going into next year, or even the ability for the Fed to do so if, demand remains strong and keeps inflation, reasonably sticky. So obviously, the Fed speakers will add some colour to that. I do expect that we may see some volatility in the currency markets, maybe not because of the retail sales print, of course, but as has been discussed a lot today, just some of those political risks in Europe, France in particular, and the uncertainty there. Now that sort of no confidence motion has passed French Parliament, and what that could potentially mean about the future complexion of Parliament going forward, as well as possibly further pressure on President Emmanuel Macron to call an early election and open the presidency, which one suspects that the National Front is trying to achieve in a bid to maybe win the presidency. And obviously Le Pen sort of positioning herself with these kind of sort of petty politics over the last few weeks to try and sort of disrupt things there. So that's continuing to create that volatility in the euro will also be a driver of the US dollar and other currency markets. But again, to circle back, we'll get a little bit of a snippet on that labour market, US labour market with the jobless claims, which will be important, but all eyes to that non-farm payrolls print for what it says about what the labour market was like in November, and again, whether the markets can move ever closer, as it has been recently, to fully pricing in that December rate cut. Well,
just to keep you abreast of what's happened, the local market, the S&P ASX 200, closing at 8,475, up by 0.15%, Kyle. So that's the day, and we really appreciate you wrapping it with us.
Thanks so much.
Have a good one. Joining us from capital.com. So yeah, just to rewind slightly, get across the stock of the day. It was HMC Capital, Mark Gardner, MPC Markets, Rudy Philippek Van Dyke, FN Arena. Let's hear what they had to say.
If you lend your ear to the industry, then not all the assets that go in there are of
high quality,
of world-class quality. So I would be a little bit more cautious here. I mean, personally, I don't like to join others when the herd is moving into one direction anyway, because I like to be more considered, and I like my shares they don't have to rally every day.
So HMC buy, hold, or sell?
I would take profits here.
I'd be trimming if I owned it. I'd probably be looking back at that, around that sort of 850 mark again to potentially be buying back in, but 850 to 950 sort of area. But yeah, I think this is definitely a stock that will give you another chance, and they're spending a fair bit of money at the moment. So I think there'll be a couple of disappointing results at stages across the next couple of years before. Yeah, but long term, I think they're in the right areas.
So that, of course, comes from our program called The Close. It is live from 12 p.m. Eastern each and every weekday. And of course, you can listen to it in podcast form or catch up on our website with it as well. If you would like to submit a stock for us to consider, for the experts to consider, you just need to go to ausbiz.co/call-picks. And if you become an Ausbiz contributor, you go right to the front of the line to the guest of your choice. Just a little something to keep in mind if you'd like to become part of the Ausbiz family. And thank you for those of you who have. Let's get across some market leaders now. Ramelius Resources put out a really good day, up by about 9%. It is participating in Spartan Resources capital raising. So a few details coming through on that front. Genesis Minerals, Capricorn Metals, West African Resources, and Block or Square, up by 6%. Now looking at the flip side of the coin, and we did have Liontown Resources, Coronado Global Resources, Pilbara, all amongst the worst performers. And we also added Lifestyle Communities, boy, it's come under a lot of pressure, and Iluka Resources to that list of laggards in the bigger end of the market and the smaller end of the market. Had some winners there with GTN and Silver Mines. Race Oncology, we spoke with the CEO just a few moments ago. We'll get that up online for you if you are into small caps and like to know why that share price is up by 11%. Flip side, again, what goes up sometimes comes down. Pretherm, 29 Metals, so that did a cap raising. Imugene off by 11%, and Centaurus Metals as well, down by 7%. I mentioned just quickly with Kyle what's happening overnight, the trade balance for October in the United States, job cuts as well. So we get these minor reads leading into the non-farm payroll report tomorrow. Also retail sales in Europe, and we will be keeping a very watchful eye on what's happening in France with the government, which looks set to be near to collapse. Tomorrow, Collins Food here locally trades ex-dividend. We get a bit of data out from Japan, but after yesterday's GDP read, we had international trade today here locally, as well as household spending intentions from the ABS. It's a bit quieter on the economic front tomorrow here. Now, I already said that we did see a bit of a waning in the market momentum toward the close. CBOE Australia Index closed flat. We had a better performance coming through from the S&P ASX 200. Week to date, it's up by 0.5%. It closed at 8,475. At this time, so just about 4:20 here in Sydney, we still do have E-minis in New York. Oh, I should say they're actually coming from Chicago, but S&P 500 and NASDAQ E-minis under a little bit of pressure. Japan's Nikkei looking pretty positive. Hang Seng down by 1%, and Chinese mainland markets into positive territory. We also should have mentioned throughout this that iron ore did come under pressure today, so that's perhaps as well why we saw a little bit of waning of sentiment throughout this afternoon. As I say every day, thank you so much for watching, for listening. You can catch up with anything you may have missed on our website, ausbiz.com.au. And we look forward to seeing you from 9:45 a.m. from all of the team here. Hope you have a good night.